Why is TDY? I apologize in advance, but this video is going to get real technical real fast. TDY reimbursement is all about taxation. Taxes? What? Yes, taxation. It's crazy, right? The government taxes members of the government. It taxes government agency employees just like any non-government occupation. But you, as a government employee, already know this. They say that in the Army, the pay is mighty fine. They give you $100 and take back 99. Anyway, the reimbursement you receive while on TDY are a business expense, in contrast with a personal expense. Income is taxable. Business expenses are not taxable. Business expenses are a tax-free entitlement. What is a business expense? IRS Publication 463 calls them ordinary and necessary business-related expenses. And an ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your business. Okay, so TDY is business-related because it's travel? Yes. How is travel a business expense? This is right out of the IRS publication. If you are traveling away from home, if your duties require you to be away from the general area of your tax home for a period substantially longer than an ordinary day's work, and you need to get sleep or rest to meet the demands of your work while away. So when your employer sends you away from your tax home, you incur travel-related expenses. Travel expenses are the ordinary and necessary, again, here's that phrase, ordinary and necessary, of traveling away from your home to do or your business or profession or job. Now here's something super important. You can't deduct expenses that are lavish or extravagant or that are for a personal purpose. Wait, what? You can't deduct expenses for personal purposes? I need to eat. I need to sleep. Isn't a bed or a stove used for personal purposes? Those sound pretty personal. I'll address that in a future video. It's important. How does this relate to your specific agency? Well, every business, this includes government agencies and departments, that pays travel expenses must have what the IRS calls an accountable plan. The accountable plan for the US government is the Federal Travel Regulation, also known as the FTR. And as far as regulations go, this one is exciting. The FTR is in Subtitle F of Title 41 of the Code of Federal Regulations. It's super fun. However, your agency probably has its own accountable plan that nests underneath the FTR. Your specific agency probably further restricts what is permissible under IRS regulations and under the FTR. Why is that important? Well, you definitely must follow your agency's regulation. However, if your agency doesn't reimburse you for a travel expense, the IRS might still consider those expenses to be tax deductible. So, for example, if your agency only reimburses you for 25% of the daily lodging, and you have to pay the other 75% out of pocket, that 75% could be a tax deduction. Cool.